is Lumax Auto has made a new acquisition, buying 60% stake in Green Fuels Energy Solutions alternate fuels business for about 150 odd crores. To discuss this and talk about the synergies from this acquisition, we have with us Anmol Jain, who's the managing director at the company. Thanks a lot, Anmol, for joining in. Always a pleasure speaking with you. Let's talk about this acquisition itself. What does it do to your overall business, prospects? So what is the reported revenue and margins of the business that you've invested for 60% in? And what are the plans of you increasing your stake further in this company? At what milestones?
Thanks, Mangalam. Thanks, Nigel, for having me. So I've always said this, Lumax is a very diversified product portfolio company. And as a part of our inorganic growth strategy, we want to continue diversifying into new product segments. We were not present in the alternative fuel segment, and this actually leapfrogs us into that zone or that strategic focus. We're quite bullish of the whole CNG evolution in the passenger car space as well as in the CV space in India. This company already has strong inroads into passenger car makers like Maruti Suzuki as well as Tata Motors. And if you look at the industry landscape, I believe almost close to 16% of the total passenger car industry was CNG, with Maruti leading it by 28% of their total production in CNG, and they want to take it up to 35%. So clearly a big growth which lies ahead for us, and that's the reason we bought 60%. In terms of revenue, for a full year, annualized revenue, perhaps in FY25 or 26, it should be looking at around 300 to 350 crores. Obviously, for this year, it will be much lesser given the 4 months only of the financial year. And we do expect this to be growing at anywhere between 25 to 30% CAGR over the next few years.
All right. Hi, Anmol. Good morning and good to see you in. This is Nigel on this side. It's been a while since we spoke. So we're going to hold you at that number of around 350 crores for FY26. And from there on, you're saying a 25% growth is what is possible. Give us a few more details. What kind of profitability will you be looking at for this particular business? Point number one. And what plans of buying out the remaining 40% stake?
So as of now, Nigel, let's say the margins are maintained at around 18 to 20% EBITDA. We do expect that with this CAGR of, let's say, 25 to 30%, the margins should be sustained. Given the fact that Lumax has always been a more partnership-driven company, so when we say acquisition, the promoter who has founded and built this company continues to be invested with the 40%, and we're going to co-create the value. Lumax has great relationships with the OEMs, and the technology is there already with the current entrepreneur. So jointly, we will co-create value and take this to greater heights together. So there is absolutely no plan as of now to expand or increase the stake from Lumax side.
All right, no plan to expand the stake right now. But what's interesting is, through these partnerships, what has happened is that you've increased the content per vehicle for Lumax over the years itself. So let's just talk about that. The last time you joined us, it was close to around 15,000. You expected that to grow by at least 20 odd %. I just wanted to understand, of this 15,000 content per vehicle, how much of that is, fuel agnostic? And with the addition of this, how much does the potential content per vehicle increase for you?
So Lumax Technologies as a whole, let's say, of all the joint venture subsidiaries put together, the higher end of the spectrum for us would be close to around 30 to 35,000 per vehicle on a particular platform. This obviously would include largely from IAC, which would have the cockpits and the door panels and the interiors and whatnot. Again, added to that, the certain other joint venture products which we do. So we're looking at 35,000. Let's say at a peak right now for passenger vehicles. Coming specifically to green fuel, I think right now if you look at the area which this company operates, which is largely the delivery system, what happens essentially is that from high pressure to low pressure, there is a whole delivery system which goes onto the vehicle. That delivery system by itself would be around 15,000 per vehicle, out which comprises of 4 key core products. This company presently operates in 2 of those core products. So thereby about 7,000 to 8,000 per vehicle is our addressable market. But again, we will grow the wallet share with both the OEMs and expand this to other OEMs in due course. Also, we have plans to enter the other two core products where the company is not currently present. So addressable market for us would be anywhere between, let's say, 15,000 upwards per vehicle in the near future for this particular company.
Okay, all right. Anmol, what about for the company on the whole? What kind of growth can you deliver, say, in FY25? I think the margins have been early teens, 12% or thereabouts, with potential to improve in the second half of the year. So could you tell us revenue growth for this year with margins as well as for FY26, given that this acquisition as well will come into play?
So overall, Nigel, if you look at the numbers which we reported in H1, Lumax Technologies grew at about 20% on a top line, maintaining the EBITDA margins at about 14%. The outlook for current year would be similar. I would say 20% for the full year. We do expect, let's say, Q3 had certain hiccups, but I think Q4 should be smooth sailing, specifically in the two-wheelers and pass cars. So I would say anywhere around 18 to 20% for the full year with a sustained EBITDA margin is what my guidance would be for Lumax Technologies as a whole. Going forward, I think we continue to believe that Lumax Technologies will offer a much better return, probably grow 50% more than that of the industry. So anywhere between 15 to 20% should be the total consolidated CAGR of Lumax Tech over the next few years. And from an EBITDA margins, clearly our endeavor would be to expand margins further. But I would say on a safer side, we will be able to at least maintain it in FY26.
All right, take that point. Just final question before we let you go, and a quick one. You said that you have plans to enter the other two products in this space beyond the two that this acquired company gives you as well. So can we hear of any more JVs, at least in the next 1 quarter or two? Or what are the timelines of you entering that other part of your addressable market here?
So those two product lines would be addressed by the same company, Lumax Green Fuel. We already have certain technical partners with whom we will, get these products into the market. So as of now, there are no new JVs on the anvil. But again, given a midterm perspective, we're always looking out for, new ways to grow both inorganic and organically.
Got that. The street likes what you said. The stock was holding up in the green, but as you were talking about growth prospects for this business itself, increasing total addressable market, at the same time increasing content per vehicle, the stock has moved to the high point of trade. Wish you good luck on the execution of this deal itself. With that, we move forward.